Tesla stock continues to drift lower, and there's only 48 hours left before this could be a major inflection point in the stock market. Now, we come over and look at how the indices fared across the board. The Dow was down 190 points. Nasdaq was down 10 points. S&P 500 down 6.83, and the Russell 2000 down 0.37. However, when we look at advancing issues versus declining, we actually had more issues advancing on the day. 50.7% of issues were advancing on the day. Then as we come over and look at the sectors across the board, by far outpacing everything else to the upside was technology, followed by utilities, and the big laggard out there today was consumer defensives. Now, as we come over and look at the fear and greed index, right now we're sitting back at 22, which is exactly where the closing price for the fear and greed index was yesterday. Now, intraday, we did see this come up to about the middle of fear before ultimately getting smacked back lower. So is the market done? Is the bull market essentially coming to an end? If we look right here what this billionaire hedge fund has to say, stock market todays are just about as risky as I've ever seen it, is what Elliott says. Now, this is going to be very important. We're actually seeing one of these risks actually unfold out here this morning. And what I mean by this is, if we go back real quick and we start looking at a chart, let's say the SPY, we put this on a 5-minute chart, and notice this morning, what do? We gapped up, we continue to run up. However, what changed out here around 12:30 this afternoon? It was very simple. Right around 12:30, we see Trump vows to slap 25% tariff on EU and claims block was formed to screw the US. Now, if you thought that was bad enough, that's not the only thing we have to worry about. Look at today. We had new home sales come out and we actually missed. It was forecasted to come in at 679K. Previous was 734K, and we came in at 657. And if we look at this article right here, new home sales plunge in January as mortgage rates spike. And look at this graph right here. If you notice, look, once again, we see the housing market starting to come down. Now, is this nothing more than just a little bit of speed bump? Nothing to worry about. Come on in. The water is warm. You guys let me know what you think in the comment section down below. But as we go and look, tomorrow is going to start to get very important. When we look at the economic calendar for tomorrow, starting off at 8:30 a.m., we have preliminary GDP numbers coming out. We have the weekly unemployment claim numbers coming out. We have durable good orders coming out. We have FOMC members speaking. We have pending home sales at 10. So we have a lot on the plate tomorrow. However, when we look at Friday, it's going to be equally important, if not more so. Starting off at 8:30 a.m., we have the core PCE price index. And this is really the Fed's preferred measure of inflation. This is also going to give us a heads up. Are we now entering a period of stagnation? We essentially have 48 hours left until we get more evidence to the contrary or to the belief that, yes, indeed, we are entering stagflation if we are not already in it. Then at 9:45, we have Chicago PMI numbers coming out. Then at 10:15, we have Goldsby speaking. Now, after the bell, we had NVIDIA come out with earnings. You see a spike up, you see a spike down all around. And if we actually measure from the high of this candle all the way down to the low of that candle, you can see that candle is at 8% range from high to low. Well, after the bell, it wasn't only NVIDIA that had earnings coming out, but if we come over and look at Salesforce, yikes, a little bit of a negative reaction out here for Salesforce with their earnings. And this is a common theme that we've been seeing during this earnings cycle. We've been seeing a lot of stocks gap down once their earnings are released. For instance, take a look at Google. Earnings come out, boom, came crashing lower. And again, a lot of the high flyers out there, we're now starting to see a lot of cracks out here. However, when we come over and look at the S&P 500, we're at an inflection point right here, right now in the market. Now, do we simply consolidate near this prior swing point over here? And one thing to note, if we start closing below 590.43, that's going to negate that upper ABC pattern that was way up here above all-time highs at 626.15. Now, we know February is the second worst month out here for stocks. Is this nothing more than a shakeout, shaking out some of the weaker longs, and we're getting ready to rally to new all-time highs? On the daily chart, the MACD indicator still looks bearish. On the 4-hour chart, the MACD indicator is still bearish, but now we have this wick of this candle, and this is something that we're talking about today during the live streams. Is the market about to come back down here and potentially run those wicks? And if you want to make sure you don't miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. Now, when we start diving down to, let's say, the 30-minute chart, notice at this moment, we still have a higher low in place. But even if we come down here and maybe have an equal low, like a little double bottom type of pattern, will that set up some type of MACD divergence, aka signal we are likely going to get a bounce in the market? Now, one of the areas I do want to watch out here tomorrow is going to be this minus development area. And essentially what a minus development area is, just think about it as inefficiencies in the market. Whenever there's an inefficiency, the market loves to come back and repair it. And that minus development area comes in about 596.19 up here to about 597.14. The way I identified it was within the profile. You can see it's kind of this valley within the profile. I want to remind everybody there's 6 days left to take advantage of Apex's 80% sale off all their evaluation accounts, pass in as little as 1 day. And if you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Then as we come over and look at the futures markets, notice what we did on the 4-hour chart. We started getting into that wick, that low that we had out there yesterday. Then as we come over and start looking at the daily profiles, notice once Trump came out with that tariff news, we've seen the S&P come much lower. Now we were able to take out yesterday's point of control, and I'm not sure, did we quite make it down, which we did. We made it all the way down to yesterday's value area low. Once we went below it and we started coming back up, it increased the probabilities we're likely going to go higher. Now, when we look at the volume profile levels that I'll be dealing with for tonight, 5974.25 will be value area low. The point of control is going to be way up here at 6,015.75 with a value area high coming in at 6,022.25. Now, I want to caution you guys on this. If you guys are normally used to playing volume profile rotation trades, which we talk about a lot during the live stream and in a lot of these analysis videos, if we break above value area low, then the next target generally is the point of control. But since it's so close near value area high, instead, I'd like to pick off this little high volume node on the profile at about 5991.25. I want that to go ahead and be my first target. The second target would be all the way up here towards the point of control. But note, if we start coming back down below value area low, then I want to turn my attentions back down towards the lows of yesterday. And I actually want to zone this area out. Candle wick right up here to the candle body. Now that zone is going to come in anywhere from about 59.37 down to the low of about 59.24.25. So it's a very easy if then syntax. Are we trading above or below value area low? Now, when we come over and look at the dollar index real quick, dollar index had a little bit of a pop up here today. Not much, all right? We didn't take out the high from the prior day. MACD indicator looks like it's in the early signs of starting to firm up. Now, with the dollar index about to start to firm up and maybe catch a bid here, are we about to see gold start cascading a little bit lower? I still want to be on high alert. Can gold come down towards that 38% retracement or even come all the way down below the 50 and potentially fill the gap all the way down here at about 2769.2? Keep in mind, gold does love to do 50% retracements. So once this turn gets underway, we're going to see just how low it will go. Now today, what do we see out here with the VIX? The volatility index was down 33 cents. Right off the opening bell, we've seen the VIX coming lower. Then right around lunchtime, when that tariff news came out, we've seen the VIX rocking it up. We've seen the index start to trend lower and basically undo a lot of this morning's gains. Now, as we come over and look at the Qs real quick, what do we got going on over here? QQQs on the daily chart, MACD indicator still bearish. And again, similar to the S&P, look left, we're right near this swing point. This swing point must hold. If not, that's going to negate the ABC pattern up here at 543.93, which that target would be all the way up there at all-time highs. We start looking at the 4-hour chart. MACD indicator still looks bearish. No signs of firming up yet. But then when we dive down, start looking at the 30-minute chart, notice even though we made a higher low, you can also see the MACD indicator is starting to firm up just a bit as well, which also leads me to believe that we could see a decent sized bounce in the market in the very near future. Now, if we are going to get a bounce out here, one of the things I want to do, and you can apply this to both the Nasdaq and the S&P, but just pull Fibonacci retracement from the swing high down to the swing low. The first stop would be the 38% retracement, which is right near this high volume node, and then maybe all the way up here towards the 50% level at about 524.82. With the economic news that we have coming out tomorrow morning, that could be the catalyst to get the market bouncing up a bit higher. Now, as we come over and start looking at the Nasdaq futures real quick, if we start breaking down below the low of yesterday, I want to start turning my attention towards this high volume node at about 20,756. Now, if you notice, we are miles below last week's value area low, which I don't think we're going to make it up there this week. I'd be rather surprised. What I am keeping my eye on, though, is this going to form some type of double bottom pattern out here. Then we come over and we start looking at today's profile. And again, I'm not sure if this volume profile is messed up or not, but it's looking like value area low and the point of control are at the same exact price, 21,055.00. We're going to have value area high up here at 21,308. this is quite the anomaly out here. So what I want to do instead is I want to turn my attention towards this zone right over here. And I want to use this as the point of control area for me. So if I'm looking to play the market up, I want to target this zone. Now that zone is going to be anywhere from about 231 down here to about 208. Now, if we do start breaking above value area high, I'm going to want to start to focus right up here towards 21,603. Now, if you're sick and tired of being denied payouts with Apex Trader Funded, and you want to learn why you're getting multiple payouts denied, and you want to learn a very simple hack, then make sure to watch this next video right here.